Nare? That's correct. Nari or nare? Nare. Nare. I say it correctly. Kim Long is easy. Easy to say. Borirot, correct? Yes. Shreliak. I said it correctly. Good. Fang Fang?
Yes.
Is that how they call you, Fang Fang?
Yeah, correct.
Correct. That's your given name. In Chinese, that's also the Chinese name.
Yes.
Oh, happy Chinese New Year, by the way. Very near. Yes. And
I still here to have my class.
oh yeah, that's a Saturday, Sunday. And then still happy New Year. Yes. All right, Salim. In your name? Samnang. Okay, hi Samnang. You forget your Kim Hak. Okay, very good. Hello. Who's out there? Meng Hood. Good. Hello. It's not fitting on your table. All right. Sophia? Right? Sophia? Okay. Good. All right. We are a few seconds and not everybody is here, but never mind. We can start. Okay, but maybe we give a few minutes. I'm not. I didn't know that had a sound. All right. Oh my God, I switched it off. All right, we'll give a few minutes more. Maybe they're in another room or another on the other building. I hope they are finding their way over here. All right. Where do you work, Pampang? Mm. 9 years already. Oh, you speak Cambodian already. Oh, very good. So we cannot say bad things about you in Cambodian, no? Just kidding. How do you like it here? You like it, huh? Yes. So are you taking master's degree? Or ACCA only? Master's? Oh, perfect. Oh, congratulations. That's nice to hear. All right. Okay, everybody. Okay. All right. I think we can begin or not yet. 2 more minutes. Just in case, some people are coming. All right. 1 more minute. We get everybody in. Okay. So I hope they can see my face. Hello. Okay, I think we can begin. Yes. All right, welcome to this class, and I am glad to be here today. Sophia, hello. All right, and nice to see you. Nice to see your face. Nice to see you physically. It's always fun. Now, our agenda for today. We are going to review chapter 1. Okay. chapter 1, remember we started talking about management accounting. And I did think, did I give you a homework to do? Yes or no? Yeah, yes. Yeah. Did you do it, Salim? That's the question. That's a question to answer. Partially done. Okay, we're going to go through that because that will be helping us into going into some major information discussions that we will have today. All right. The sources of information, I will issue you something for you to work on later on as a homework. Okay. And also presenting information. I'll explain to you those things later. Sorry, there's one thing I want to add here as part of source of information. Because remember, last time we talked about sources of information. You remember in chapter 2A, the types of information, where we get it from, internal, external, secondary, primary, yes. But today, I would like to add something on chapter 2. All right, A, and which is on data, big data analysis. Now, this is not in your lecture notes. I sent the lecture PowerPoint in your Google Classroom. So you just take a look at it later on when you reach home. The notes to this big data analysis is separate information I put in the Google Classroom. Okay, it's not there since it was not ready by the time those books were printed. Okay, and then we go to the main part today is about classification of costs. All right, so we are now starting the foundations in management accounting proper, talking about classification of costs. Because remember, in this particular course, we will learn concepts in management accounting. But to be able to understand the concepts of management accounting, we'll go to the basics. How do we know what are costs? What are the different classification? Because it will help us in using the information in the different techniques later on. Okay, so this is our discussion, right, for today. Now, okay, so let's review a bit. Okay, we said management accounting is really for the purpose of who again? Who uses management accounting? Is it mostly for the shareholders or for those making decisions in the company? Is it the management or the shareholders? So what we prepare in management accounting is for management to do their jobs, correct? And can you tell me what were the jobs we said they normally do? What do management do? Play golf. Yeah, yes. You're too fast, Fang Fang. Yeah. Okay. All right. So management functions include planning. Yes. What else? They control. Control means they make sure things are happen based on budget. Correct. So whether it's expense or whether it's sales. Yes. The third. That's right. Make decisions. Correct. And when they do those functions, it's basically based on the objective of the company, correct? So you can see here, right? We said that the management would do their functions based on what the objective is of the company, right? So normally there would be, where does the objective start? What does the objective lead the management to do? They have to find the strategies to achieve the company's objectives. And the objectives, where does it come from? From the vision and mission of the company, correct? Yes. And therefore, so in evaluating the strategies, they need information. That's where we come in. Okay. And they need to do that because they have to decide what strategies to do. Okay. what are they going to, what strategies to take, make the decision, and implement it. Okay, whatever strategy they want. Then after that, this is where the control comes in. Yes? What did we say about control? Controlling is comparing. Yes? Comparing what? Comparing actual versus budget. Why? You guys work in companies already, correct? Why? Why would you want to compare actual versus budget? What's the purpose? Yeah, variance. That's correct. You use the correct word. A variance is the difference between actual versus budget, because that is the real essence of controlling. Because what's the purpose of a budget if you cannot compare it in what actually happened? Yes, and that basically controls how much the company is spending, how much it didn't spend, because it's not also good to underspend, because underspend means the company did not do its objectives. Because that's why you set a budget, because you know they needed the money to achieve the objectives, correct? Yes. Yeah. One other thing that variances or that difference will tell them is that they will tell this information, will tell the management, hey, all right, you have to do these actions. It's called control action. Why? Because if there's an overspend, there is a need to see why there is an overspend. Was it because the planning was wrong? The budget was wrong? Or the execution was wrong? See that? The implementation was wrong. Okay, people did not find the correct supplier. Yeah, they did not find because they were lazy to find a good supplier. Okay, or they overspent because the workers were not trained enough and kept spilling the materials all over, and they used more materials than normal. Okay, so actions need to be set up. All right, and what was the homework I gave you, Solim, which you said partially done, is basically, we said, what kind of objectives does profit-making companies have, right? And non-profit making companies. By the way, non-profit making companies, do they also have to make objectives and plan and yes? Or only profit-making companies? Both? Both. Okay, because here, yes, they are not making money, but the donors would like to know what happened to the money that they donated. Yes? Now, I'm not talking about you and me. We put a small change in the box. But UNICEF. What's that one? There's another one. There's a big donor. UNICEF, oh my God, I forget. But what these UN bodies that they actually provide money to NGOs, correct? They want accountability at the end of the year. All right, if their objectives, now, the objectives may not be mainly exactly the same, because you will not see here, make profit, correct? Yeah, you will not see market share. Yeah, so that's why I gave you some activities to do to identify what could probably be some objectives of profit companies and non-profit companies. All right. Now, would you like to take a note and write? I will give you some time. And this is what I like when I'm here. I can see if you're writing or not. When to stop, not to stop. When to speak, not to speak. All right. Now, can I proceed? Yes or no? Yes, okay. All right. Now, the other question I ask you, is there a difference between financial accounting and management accounting? And the answer we said was yes. Correct? All right. And one of the things we said, financial accounting is legally required. There is a law that if you are registered as a company in any country, Cambodia, Philippines, the United States, the UK, if you are registered as a company, there is a legal requirement to submit financial statements at the end of the year. Okay, whatever is your accounting year. However, companies are not legally required to have management accounting. All right. This is very much an for internal purposes only. You can see that. Very much for internal purposes. Yes. However, financial accounting is also used internally. Yes. So external and internal, and then internal only. Now, financial accounting is prepared on a true and fair basis. Okay? But in management accounting, we try to be as accurate as possible. Yes? So when we are looking at cost of a product, should we be accurate? Yes or no? Because remember, in management accounting, we will look at cost of products, correct? Yes. Why? Why do we need that to be accurate? What kind of decision? Example. Pricing. That's right. That's right, Kim Long. Right? So yes, it is going to be used for decision, and the decision, if, for example, would be pricing. What pricing do we need to be precise when pricing? Can we not go over or underpriced? Right? We have to be fairly accurate, okay, in a company, because if you price more than what you need, you'll not be competitive, right? And people will choose your competitor's product. Then if you underprice, you don't take advantage of the profitability you could have. You understand? If you go too low, you might not reach the profitability you like. And sometimes it's going to be a problem because your shareholders expect a certain level of profitability. And if you're a publicly listed company, it will affect your share price. Yes? Or shareholders might want to leave your company if their earnings per share will go down. It's all connected, what I'm trying to say. Next one. Financial accounting has to follow the generally accepted accounting principles, whether it's IFRS or US GAAP, in how they prepare the financial statements, the financial records, and the financial statements. Management accounting, though, we don't have specific rules. Okay? We don't have a standards for management accounting. We don't have that. Yeah? But what we have is, if we go to here, okay, it depends on what the management requires for them to do their job. Yes? So they will tell us what they need. And that will be the content of our management accounting for that period. Okay? So if they are looking at HR division, and that particular meeting, they will decide on things related to HR, then they will need information relating to HR. That's what they're going to ask you. Segments, right? If the meeting that they're going to have is about production, then they will ask you for information about production. Okay, depending on what's the objective of their meeting, what do they want to focus on. All right? So not, okay? However, financial accounting is more rigid because they use past data to report, at least annually, all right, to about the entire organization, how it has been doing for the past year. Okay, not the financial statement on production or only, but entire company. Okay, all right. So the format, of course, is governed by, again, the generally accepted principle. No set format for this, because remember, it can be segments, it can be division, it can be products. Okay, so there is no set format of how the report are to be presented. It depends on the needs of the management. Okay, and their needs depends on what they want to do. Are they planning? Are they making a decision? What exactly is the purpose they want to use the information for? Okay. Okay. Everybody clear now? Oh, you copy very fast, huh? It's like a photocopy machine. All right. Now, there's something else I want to tell you about management. Okay, there are different levels of management. Yeah, so when we speak about management, we know there are managers who are in the strategic strategic position. Okay, sorry, I'm going back and forth, but I think it's in there somewhere. Okay, strategic department or level. All right. There's the tactical level. Sorry, did you find it? Okay, thank you so much, Fang Fang. Yeah, so page 13, everybody. You found everybody? Yes, okay. Page 13. All right, so there are different levels, yes. Okay, so you can see some examples I put here. Okay, operational level, tactical level manager, and strategic. Very important. Very important because we're talking about management information. And each level of manager needs different set of information. Why? Their job is different. These managers here look at what's happening day to day. How many units are damaged in production on a daily basis? How many people are absent during the day in the production? Because they have to manage the production for that day if many people are absent. Yeah? Very important. Over here would be branch managers, CEO, because they are the ones looking at annual profit, ensuring that resources are available, staff is available, materials are available, okay? Space is available, factories. So these are the ones who's dealing with that. The one on the top here, they need information both internal and external because they are the ones looking at ensuring there is market share. They look at strategies because of that could be affected by economic situations, okay, in the country or globally, all right? And they actually do a forecast for a longer period of time. Yes? Right? If these people in the middle looks at a yearly basis, these people on the top would be 2 years and beyond. All right? Do they need separate kind of information? A different kind of information here. All right, so it's important to know, again, when we prepare as management accountant, when we prepare information, we need to know who the managers are, what level, and what they are going to use the information for. Okay, that will allow us to be able to prepare the information that they need and that it will be understandable and relevant to their purpose. Okay, questions so far? All right. Okay, so I think I'm finished there. I just discussed all this with you. That's right here. Let me just show you this very quickly. This is very nice. Okay. The strategic plan is important because it feeds into the tactical and operational plans. Makes sense, huh? There's a flow because the strategic plan, of course, starts first. Then the tactical plan will be coming from the tactical plan is dividing the strategic plan into years. Okay. And let me just explain it. The strategic plan talks about an overall plan for the company, correct? Then it breaks it down into annual segments. So it will be doable. Then the actual individual yearly plans will then translate into what each department will do on a daily basis, on a weekly basis, etc. All right, so that is the hierarchy of that. Okay. All right. Last week, no, when did we meet? Last Wednesday? Okay, I forget already, yes? All right, we talked about sources of information, including sampling, correct? You remember that? Yes or no? Maybe. Sources, correct? External, internal sources. All right, different types of information. Okay, so there is a set of example questions here that I will leave you to practice. And I will post it in the Google Classroom. Okay. And I want you to practice answering those questions. All right. So, but we will not tackle it here. But there is one question though I would like us to answer. And this question is an excerpt from the exam itself. Yes. So, and the question in here is about sampling methods. Okay. All right. So the question here is, under which sampling method does every member of the targeted population have an equal chance to be selected as a sample? What's the answer based on our discussion last week or last Wednesday? How are you? Good. Okay. Cluster sampling was the first one. Yes or no? No, it's not on your notes. Sorry. This one is I selected separately. So what is the answer? Samnang says, who has answered earlier? Samnang, was it you or Solim? I heard a voice somewhere here. Is it cluster? Random? Random? Yes, the answer is random. Yes, random sampling. You remember the cluster sampling is you group, similar to how they look at the statistics of elections. You remember? They break a country down into groups, into municipality, into cons, into whatever, and then they go to the last part, and in a cluster, they will ask and survey all the residents of a particular street in a sangkat. You remember? I presented that. But the difference between that cluster and multi-stage, in multi-stage, they go to the same process of dividing and picking out a particular sangkat. When they go to the sangkat, they go to the street, they don't survey all of the residents. They actually pick randomly some of the houses there. Okay, so that is the difference. Systematic, you remember systematic? Yep, the first one is random, correct? And then they will determine a certain pattern. So every third will be part of the sample. Okay? And then stratified is grouping the population into groups, and then and then take the sample, mirroring the population's grouping. All right. Okay. All right, but the rest of the questions, okay, the rest of the questions, I will post it for you to answer. You got it, everybody? All right. So let's, before we go and finish chapter 2A, part of chapter 2A is about information. Sorry, again, this one is not on your lecture notes. I sent it in your Google Classroom separately, okay? Because at the time that your books were printed, this information was not yet available. All right. So let me show you a video about, okay, because we talked about in information, in chapter 2A, the difference between data and information, correct? All right. So we said information is processed data. So nowadays, there is such thing as big data, and which is important in terms of now managers' ability to make decisions can be influenced by the data analysis that is provided to them. Okay, so let me show you a video first that you would probably be interested in. And this video is about big data. All right, so please watch and learn. Okay.
What exactly makes big data big?
Hold on, sorry. Let's start from the beginning.
What exactly makes big data big? A very basic definition is that big data involves datasets so large and complex that it's difficult, if not impossible, to process them using traditional software techniques. In this context, traditional software techniques refers to the processing of data on a single computer. This all comes from the explosion in the quantity of data humankind has generated since the emergence of the digital age. Over the past few decades, the increasing presence of computers in workplaces and homes, the rise of the internet, and the recent ubiquity of mobile devices have all contributed to the exponential growth in the amount of data. Although computers have provided us with the means to rapidly obtain, organize, and analyze data, their power hasn't kept up with increases in the amount of data we're gathering. These massive volumes of data may be difficult to handle, but more data leads to more reliable and precise analyses. To give some idea of the volumes of data involved, here are some good examples. The New York Stock Exchange generates over 1 terabyte of new trade data each day. Facebook is storing over 10 billion photos, occupying 1 petabyte, 1,024 terabytes of storage. Ancestry.com has over 2 petabytes of data, and this is growing at 20 terabytes per month. The Large Hadron Collider project at CERN on the Swiss-French border generates 15 petabytes per year.
Imagine. So all your photos in the Facebook goes there, yeah? Okay. So, all right. So why is it big data? You can see big data is important nowadays, correct? So, right. The main focus of big data is because of the digital revolution. Companies are able to collect, store all this data, and process them at the speed faster than you can think of. Have you ever noticed you just search something on Google, and when you open your Facebook, it already gives you some advertisements on what you search? Scary. Yes? Sometimes. I'm not sure, but maybe this is just paranoia. Sometimes you're just thinking of something, and the next thing you see is it's on your Instagram or in your Facebook. Have you thought about that? And I was looking at the room. Did I speak about it in my Google? And you know, do you have these things that you say, "Hey Google," there's a thingy, right? And you say, "Hey Google, what's the weather today?" And somebody answers you. Yeah, it's I don't know what to call it. What to call it? Google Home. This thingy that yeah, it's yeah, Alexa, yeah, whatever you okay. So basically, I was thinking, is somebody listening to me and gathering the data and putting it on my computer and telling me what I want to do? For example, I was searching for mobile houses, you know, these container houses, and everything is just smart houses and pictures of these, and so oh, scary. Okay, so basically, yeah, right. So yes, that's the base, very basic one that they do. They use algorithms, and where does that come from? It comes from big volumes of data. Okay, sophisticated data analysis is about accessing data, which is useful. Look at this, accessing data that is useful for decision making. Yes. And three things. Now that's one thing about FB, is just they're providing an algorithm for us to help us make decisions. But for big companies, okay, they use this big data to know exactly what to launch, when to launch, what kind of product to produce. Correct? Okay, where to focus. How do they know that they're going to produce that kind of product? So basically, it makes them be able to make quality decisions. Okay. All right. So data brings to improve quality of decisions. Okay. Volume, for example, they need more data to be more so that their decisions will be more reliable. Okay, or the information they have can be more reliable. The more data you have, the more reliable the outcome is. Yep. Velocity. This is the 3 V's of big data. Timeliness. It has to be on in just the right time. Okay, they have to be able to get the data in right time to make the decision at the right time. And it has to be having variety so that they know what would be relevant. Okay, what would be relevant. Okay, so variety. So these are called the 3 V's of big data: volume, velocity, and variety. Okay, so when you say volumes, would be a lot of transactions that are collected and data collected. Velocity requires real-time processing because it has to be timely, correct? So it requires near simultaneous time that you just were searching, and it's so scary. A few seconds from when you were searching it, not even a day. It's like seconds from where you're searching, some other information already appears on your computer or your social media. Variety, okay? It can be depends on how they're going to structure the data and what type of information they get. Okay? All right. The amount of data can make a big difference. Okay? Because the more the data they have, the more reliable is their information that they're going to come up with. All right? All right. It is too big. And depending on what type of organization, they can have systems that can collect a lot of data. Right. Velocity refers to the rate at which, look at this, the rate at which the data is received, stored, and used. Okay? So, most of the things that happen nowadays is what we call real time. Okay? Example. You went to the supermarket. When you went to the cashier, they scanned it, all right, to for you to pay. All right. So already the system will tell that from that point of scanning, the inventory of that supermarket has been updated, and sometimes it's already connected to the supplier on the ERP basis, on the enterprise-wide system, telling the supplier that this were the quantity consumed, and the supplier will be able to plan when the next delivery should be. Real time. Okay? Sorry. Another thing. Okay, you use debit card and credit card, correct? Have you ever, when you were just paying, your phone rings? You were paying, you were having a holiday in Austria, and the phone rings, and somebody is talking to you. He says, I am this person, and I am from your bank, and it says that you just purchased, you are purchasing from this company. Is this you making the purchase? Yeah, imagine that. So it's from their fraud division. So, okay, in real time. Okay, so those are part of the usage of the velocity. How fast? Variety. Okay, so in the past, we would collect data and put them in rows and columns. In other words, Excel spreadsheets. Correct? Okay. Now, with the advent of internet and the wide web, okay, our forms of collecting data and the type of data that we collect have broadened up. Okay, so it's now we don't only get numerical data, but we also can get audio. And you have heard Facebook earlier says your photos and videos are actually stored in a somewhere. Okay, I can't remember how many bytes they were talking about, petabytes or whatever they were referring it to. Okay, so new type of data. So we still have more corporate information such as enterprise. This is what I was talking to you about. Resource planning and CR, customer relations management, employ data systems so that they can do their work much faster and more efficiently. Yes? All right. Okay, so I won't bother you with that basic. Okay, so the value and lessons to be learned from big data. All right. So big data has become an important form of organizational capital. Would you agree with that? Is information now as important as an asset, just like any other assets? Yes, it is. All right. So companies like Facebook, okay, a large part of the value they offer comes from their data. Okay, the one that they make themselves, the Facebook makes themselves relevant because of the data they gather. Okay, data is increasingly also considered by not only by the tech giants, but also by many enterprises as a business asset, as I just said. Okay, all right. However, okay, some data collected. Okay, remember, data could be raw material. Okay, and they could use it in whatever way they want to process it. So they would take raw materials, which is the data, and they would structure the data into ways that will help them be able to make decisions. All right. Right? So that's why companies are offered to store their data into the cloud, because as they collect more and more data, they need more and more storage capacity, which could not be offered by any hard, what is called a hard device. In other words, a physical device. Okay, it has to go into the cloud storage. Okay. All right. What was veracity about? Veracity is the speed. You remember? The rate at which the data is converted from collecting until it's used, correct? Okay. So big data isn't only about analyzing it. It is a discovery process of how analysts, business users, and managers ask the right questions, recognize the patterns, and make informed assumptions. So, in other words, it's in terms of concept, we always think that, we are going to be overwhelmed by data and our lives will now be governed by the computers. Contrary. The big data will actually need to be processed. Okay? Yes, the big data will be mathematically and electronically processed. But the end of the day, the patterns, the assumptions, and the behavior and the decision making rests with the managers themselves. You understand? Okay? So, very important. Okay, so I'm just going through it quickly, but if you are interested, you can read through what I showed you. It is something that is interesting. Okay. So I will stop here. We don't need to know about platforms for big data storage. But you're interested, I provided it there. All right. So that is what we need as to know about big data and what it is. All right. So that would be interesting and scary at the same time. Yes. So, all right. Now, there is a chapter 2B, okay, which is about presenting information. Okay. Now, I'm not going to sit here and talk to you about it. Okay, but is it there? Where is your presenting information? Chapter 2B, can you locate? Yes, correct. Okay, so presenting information in your notes. All right. What does it talk about? It's talk about how do you present information to your managers? Can you give me examples in your offices? Yes, that is a presenting information. You have financial reports. Okay, management. Okay, how else? So when you have reports, remember in a company, you would have a title, right? You have a title, addressed to, the body, the details, correct? And you would attach anything that is calculations as an appendix. All right, now that is all there in that chapter, including presenting information. You would present using graphs and charts. You agree? Yes. Why? Why is it better to present it this way to management? Easier to analyze, yes, correct. Okay, so the managers would be able to see the story in one glance. Right, correct? Now, and if they need more details, they would actually contact you, right? So that is in, yeah, it's also, you can see comparisons with just the graphics. The graphics would actually, or tables, what do you call this? The charts would tell them a story immediately, that what they want to know. All right, so I'm not going to go through that because you know about line graphs. Yes, not from here. You would have learned it from different subjects before, correct? Okay, so that is an easy topic. What I gave you, though, which again, I am asking you to practice and I'm giving you the answer. Do I give you answers? No, I'll give you the answers a week from now. All right. Okay. Or I'll give it to you at the same time. It's up to you to compare your answers. Okay. Okay. So it's quite easy because I want to focus on the next chapter, which is the most important one. Okay. All right. Questions? Okay. No questions. So I'm going to. Okay, we are going straight to page 59. Can you see if we are on the same page? And we are going to chapter 3A immediately. Yes? All right. So now we start talking about costs. And the first thing we're going to talk about is cost classification. Okay, so in this chapter, we are going to ensure we will learn the following. First, we are going to learn the terms, what is costs, what is profits, what is an investment center. So cost center, profit center, and an investment center, and a revenue center. And then we are going to describe the needs for information about these different centers. We will learn when making a product, what's the difference between materials costs, labor cost, and what is overheads? Okay? What would be the differentiation between a production and a non-production cost? Right? And talk about elements of non-production costs like administration, administrative costs, selling costs, distribution costs, and finance costs. All right. Not today, but on chapter 3B, we shall talk about costs classification by behavior. All right. So that is also a type of classification. Classification by behavior. All right. So cost classification. So first and foremost, there is the differentiation of cost object, costs unit, and costs center. 1, 2, and 3. Okay. And classification by function, you have production function and non-production functions. All right, so there will be costs related to each of those functions. And under the functions, you would actually have cost by element, and these are elements, okay, or by nature of their costs, okay? Right, so we will learn to classify this today. Right. So, as we have learned and explained, oops. Sorry, guys. Why it's not working? Oh. All right. So, accountants, we said, need information. You remember we just talked about that? Information to assist management do their functions. Okay, so planning. Example of planning is making budgets. Correct? Do we need costs to make budgets? Yes. All right. Control. And she said variance analysis, which means actual versus budgets. Making decisions, such as pricing. Do we need to know the cost to be able to decide on the price? In one type of decision making for pricing is involving costs. Yes, correct. Because there are many ways to establish cost, but one of them is cost base. All right. However, before the accountant can plan, control, and make decisions, all costs must be accurately classified. All right. So that the planning, the control, and the decision making would be more accurate. Okay. This is a very key area of our syllabus, right? Because cost classification is the basis, okay, or the basic information you need to know as and when we progress with the different cost accounting techniques. Okay? Okay, so yes, we will be examined on cost classification in the ACCA exams. All right, so very important parts of our discussions. Now, let's start with evaluating, okay, the cost of a product or service. Okay, the cost of a product can be made up of the cost of materials, the cost of wages and salaries, which we term as labor costs, and other expenses. Example of other expenses is called rent and rates. Okay, in the UK, rent, you know, in the UK, rates refer to business property taxes. Okay, business property taxes. That you would see this business rent and rates. Electricity and gas bill. Again, in the UK, all right, gas is part of their basic needs because they have heating systems. And these heating systems, gas is actually piped in to their houses. It's like your water here is piped into your house. Yeah, there as well, gas is piped into their houses, all right, that will fuel their heaters for the winter time. Depreciation is also an example of other expenses. All right. Now, let's start with materials, labor, and start with what we call direct costs. Okay, so there's a difference between direct and indirect costs. Now, direct costs is a cost that can be traced in full to the product itself. Sorry, wrong system. Okay, direct cost is a cost that can be traced in full to the product, service, or department. The direct costs are direct materials, direct labor, and sometimes there are direct expenses. These are also called prime costs. Okay, very important term. When it says prime cost, it refers to direct expenses or direct costs. All right. Tell me. I have Anchor beer on the picture. Yes? Okay. Tell me. Anchor beer. What would be the direct materials? Yes, they had to do water. Yeah, the water, then they have the wheat and the malt to make the beer. Yes. Correct? You don't drink? Oh, I'm supposed to believe that, yes? No? Bad, huh? Okay. Just kidding. All right. So, what else? The can, the tin can. Okay. All right. What else? All right. So, if, yeah, we didn't talk about labor. Yes. There would be a production, correct? And there would be people making the beer. Yes. Or no? Yes, of course. So that will be your direct costs in this example, correct? Now, there's an example of direct expense down here. Can everybody see it down here? Are you guys at the back? Very difficult. Let me make it smaller so you can see. Okay. Can you see now? Yeah. So the direct expense is probably when they make this product, they would hire a special equipment to make this particular printing for just this product. Okay, so it's a direct expense for this product, and therefore, but it's not considered a labor, or doesn't it's renting something. So it's a rent cost. So it's not labor cost, it's not material cost, it's direct expenses, other direct expenses. All right. So these are examples of direct costs. Question? All right, so let us explain that. Direct materials are, sorry, are you still writing? I apologize. Okay. All right. So basically, yes, Salim. Mm. All right. Let me ask you. When you make the entry, debit materials, credit, whatever, cash, what was the entry in your books?
For the raw material, review the mid raw material, debit.
Yes, yeah. What did it include? What cost did it? What did you put in there? Debit what? Yeah, the cost of the materials, correct? How much you bought it from the supplier. What else did you add? What does the IFRS say? What about inventory that you buy? What does it say? How much do you put as the cost of the inventory as per IFRS? Anybody? And yes, and does it include customs, duties, and clearances? Yes. Oh, that's your answer? You got your answer? So therefore, your materials will be included in. Yes. You got it? Even though management accounting is different from financial accounting, okay, our information, especially financial data that we use in management accounting, will come from the financial one. You got it? Now you understand? Although we said there's a difference because the report is different, but when it comes to, remember, management accounting requires financial information. Where does it come from? Financial records. So if in the financial records, when you make the entry, when you bought the materials, it includes the cost of the supplier, plus the shipping, plus the customs duties, etc. Then we take that as the cost of the material and use it when we are trying to make decisions on the cost of the product. You got it, everybody? Okay. Now, to complete what I just said, in management accounting, we use financial data and non-financial data. What's the difference? Financial data, yes, I will get the materials cost here. Yes, what he said, which is what I debited in the financial records. Non-financial data relating to inventory would be how much kilograms of materials do I need to make that product? You understand? Labor cost will come from financial data. How much is the laborers paid? How much did you pay salaries for the month? Non-financial data. How many hours did it take for the laborers to make a can of that. Do you understand? And therefore, proportionate to the time it takes to make one of that, if $100 is his salary for the week and he produced 100 cans, how much per can? Again, I will repeat. You're sleeping now. 1 week, let's say, just say 1 week, a laborer is paid $100. In 1 week, he produced 100 of that. How much is the direct labor cost? $1. Yes, $1. Yeah, you know what I mean now. Yes, so I need both financial information and non-financial information to come up with classification of costs. You get it? Yeah. And classification of costs is part of management accounting. Yeah. Because in financial accounting, have you ever seen us break it down into direct materials, direct labor? No. Why do we need to analyze the cost this way? Because the management has to make a decision on the selling price, correct? Yeah, we said earlier, correct? The management has to plan if they know that this is how much packaging is required, they know how much to budget for packaging in the coming year. Got it? Budgeting is part of management accounting. Yes? Because it's not part of financial accounting. It's part of management accounting. Do we find in the financial statements budgeted expenses? Yes or no? No. Because financial accounting, remember, talks only of the past. Yes? In management accounting, we talk about the past, the present, and the future. Because in management accounting, that is where we do budgets and forecasts. Yes? Okay, got it? No. Okay, let's go home. Thank you. All right. Yes, good question. All right. Now, over here. So to specifically look at, so direct material costs, okay, are the known products. He was talking about what if I purchase my raw materials? That's fine. When he purchases, he pays for the transportation, the duties, the customs clearance. Yes, makes the cost of the raw material. But what if the company makes its own, yeah, make its own product to sell, okay, or raw material or finished product? Yep. So basically, you would have things like component parts to make the product. All right. iPhone, they would buy the parts, okay, and put it together, okay? Or they can buy some parts and make some parts. Yes? Okay. So in the process, there would be partly finished work and completely finished work. And there is something also like it finishes in one department and becomes the input of the next department. Oh, let me explain that. Okay. So, right. So basically, in making the beer, let's say there are 3 departments. Okay. They brew the beer, means cook the ingredients together with the water. Then they would, so as soon as they cook it, the mixture is transferred to the fermentation department. They add certain ingredients to make it settle and keep there for a week, a month, depending on what is the process. And then the beer that makes now the beer. When you brew, not yet the beer, they have to put the something that makes you crazy after you some time. Yes? All right? So basically that becomes the beer. And the beer is transferred to the packing department where they put them in the, no more the pictures there, the cans. Correct? So which means what goes in? Raw material goes in, correct? The water, the wheat, the malt, the sugar, whatever they put in there. Okay? This department has a finished product from their perspective. Their finished product becomes the raw material for the next department. Okay? Because this department will add more materials to make a finished goods, which is beer. Yes? From their department, it's finished from them. Okay? So the beer now becomes the raw material to go into the packaging department. They add the cans, they put it together, then comes out the beer in cases to be sold and delivered to the customer. Yes? So you can see that there are many stages, okay, also in when we talk about materials. It is, you can see here what it says here, which is partly finished. Actually, it's partly finished, the beer, but it transfers from one department to the other until it becomes a fully finished product. Yes? All right. So packaging materials like cartons and boxes are also called direct materials. Okay, any more questions on materials? No? All right, let's talk about labor. All right, so cost of labor is the payment of wages made, all right, to workers who produce the products. Okay? Okay. Inspector that are an analyst and testers that are going to be specifically required for such a production is part of labor cost. Okay? Supervisors or foremen or shop clerks, if they are specifically assigned to making the product, they will be considered as direct labor costs. Now, let me tell you again. Okay, so if there are quality inspectors and testers that are assigned for that particular product, their salaries will be included as direct labor cost. But if the company has a separate quality control department and every product that the company produces is being tested in that quality control department, that is not considered direct costs. That will be indirect costs. Okay, let's remember again, direct labor costs or direct costs can be traced fully to the cost of the product. All right, so if it's going to be in quality control department for every product of the company, then they actually will need to be considered as indirect costs. The same thing with a supervisor or a foreman of the production. If they are assigned to make that specific product, then their salary goes to that cost, direct cost of the product. Okay, direct labor cost. However, if a foreman is in charge to oversee workers in the factory that makes different products, then his salary is an indirect cost. Okay, you understand? Okay, let me stop here and get you to absorb what I just said. Right? Yes.
More or less, they should be involved in the program. Why we can call this as a
Okay. Again, I will repeat. I didn't say it's not important. I said that in cases where a job, a person or inspector is assigned only to make and test this product, only this, no other product. Yeah. But there's no other example here. Okay. But therefore, if it's only assigned here, the cost of his salary will be considered direct labor cost. Okay. Now, in another situation, this company is making this, is making another drink, yeah, a beer, and then you have another orange juice. But they don't have a dedicated tester for a particular product. But what they have is a department. It's called quality control department. All the samples of the water, the beer, the milk that they produce goes to that quality control, and they test everything. Okay? So if they don't have a dedicated, okay, you cannot trace fully here because their job involves many things. So you cannot make them a direct cost. Because what is the definition of direct cost? Direct cost is the cost that you can fully trace to this product alone. But that department who is in charge of testing all of the products of the company, they test many things. So how will you know how many hours they will spend testing this? Can't, isn't it? You can, but it's not cost effective, right? It's cost beneficial because then you have to monitor how many hours did he test this and then how many hours it's not possible, but it's also the cost of monitoring is not going to give as much benefit than, okay, we'll take the entire cost of that department, quality control, and make it as indirect cost, and later on we will just divide it among the different products. But at the moment we're talking about direct cost. So again, if I am the one testing and I'm testing only this the whole month, all right, this is what my assignment is. My salary goes as direct labor cost. But if I am with them and we are testing different products, our salary will go into indirect costs. Okay? Then at the end, later on, when we finish, when we total our salaries, and then we divide it, okay, among the different products. That is only at the time. The indirect costs or overheads will be absorbed into the cost of the product, but later on. Okay? Later down the process. You got it? The difference? Direct labor costs against indirect labor costs. Okay? Got everybody? You're sleeping already or what? Okay. Now, I know that it's a concept. It's a little bit difficult to comprehend. All right. Because we have a financial accounting mind. Okay. That's why the first lesson I distinguish financial and management accounting. All right. We have a financial accounting mind, which we will need to know that it's not, we are not saying that it's wrong, but we need to use the financial accounting to understand management accounting. But in management accounting, today, we are analyzing how to classify the cost, right? Because in financial accounting, everything went to salaries. Yes? Correct? Whether it's the salary of this person just doing this particular one or the department with 3 of us, all goes into salaries. In management accounting, we have to take that salaries and say, okay, which part of that belongs to direct cost and which part of that goes to the indirect cost? And what do we do with the indirect cost? We share it among the different products so that we can know how much is the cost of one. Correct? Because is the cost of this only direct cost? No, there are indirect costs. Our salary, quality control. What about the rent? Do we put it here? Yes, we have to cost it out in this, right? What about rent, rates, depreciation of the machinery, that's cost, right? So how much of that will be part of the cost of the product? Yun? Huh? Yes, indirect. The depreciation is indirect cost. Okay? So remember, we are only in step one, huh? Direct cost. More questions? What good question. Okay? All right. Now. Okay, now. Just one thing. One more thing is the other expenses. You remember other expenses? Direct expenses. So you have direct material, direct labor, and direct expenses. These are costs that are fully traceable to the product, but it's not materials and it's not labor, so we put it in others. You got it? Okay. So example was, if you're hiring a tool to do a particular job for this particular product, then the cost belongs here, direct cost. Okay. One other example of direct cost is royalty fee. Somebody designed this label, and the designer of this label is to be paid intellectual property fee. Yes. So it says that every time they print this label, that person who designed gets 10 cents. Yes. So 10 cents. Well, it's not material. It's not labor because that designer did not make the product, correct? But it's a different type of fee that is specific to this, because the design is this design for this product. So that 10 cents becomes a direct expense. You got it? All right. So all the three. Got it now? Okay, which means you can go for a break. If you didn't get it, we continue. No, just kidding. Yeah, but question? Yes, because the next one we are going to talk about indirect expenses. So you can see it's more colorful. Yes. Okay, so we are going for a break. And then when we come back, okay, you need 20 minutes or discounted 18 minutes? Oh, no, just kidding. All right. So, okay. So I will see you in 20 minutes. We'll talk about indirect cost. Okay? So enjoy your break. Where is my clock? Sorry, I don't have music at the moment. Not like I don't have my Spotify with me. I apologize. I forgot the password and they changed my computer. So apologize. Oh my God. How to stop it? Okay. Did I wake you up? All right. Welcome back, everybody. Are you with me? Okay. So, hi. Let's talk about the indirect costs. So, indirect costs, what does it say? It cannot be traced directly to the product, service, or departments. Another term for indirect costs is called overheads. That's right. So examples, indirect costs can also be broken down into materials, labor, and other expenses. So if there is a direct labor, direct material, and direct expenses, there's also indirect materials, indirect labor, and indirect other expenses. Okay, example, example. Oops. Let's say in the factory. Okay, can everybody see that or no? It's blocked. So in the factory, there is a set of persons who would be cleaning the factory. Yes, is important. Yes, of course, right? But these are people working in the factory, but are they making the product? They are not. They are cleaning the factory, correct? Are they paid? So these cleaning services, they're called indirect workers, correct? So their salary goes to indirect labor. Yes, but part of production. Do you think is part of production? Okay, because we're talking about classification, yes? Okay, I will ask again. All right, they are working in the factory, but they are not making the product. Are they part of production? That's correct. Yeah, because cleaning the factory is also important, right? Yeah. All right. So it's part of production. You know who is not non-production? Who is an example of non-production? Whose salary? Office staff, administration, sale. Correct, correct. The driver who drives the truck to deliver to the customer. Production or non-production? Again, the driver delivered the products to the customer from the warehouse to customer. Production or non-production? Non-production is part of here. You see this one here? Sorry, it's green. Distribution. Yes, selling and distribution. These are called non-production, but this is part of production. You got it? So in other words, in production cost, in production cost there is direct costs and indirect production cost. Do you understand? You got it, everybody? In production costs, there is direct cost and indirect cost. Do you agree or do you disagree? Okay. Now, let's come to indirect costs. Let's talk about these people cleaning. Do they need water to clean? Soap? Yes. So these would be indirect materials, correct? For the cleaning department. Yes. Of course, their salaries, their benefits, their insurance goes to indirect labor. These cleaning people may use equipment to clean, because if it's a big factory, they may need to use, big mop or electric appliances to clean, right? Is there depreciation for that? So for the cleaning equipment, yes. So that is included in indirect expenses. All right. So in other words, in indirect costs, it includes, there is indirect materials, indirect labor, and indirect other expenses. All right. All these other expenses of administration expenses, such as license, marketing expenses, the salary of finance and accounting departments, is an indirect cost. Selling and distribution overhead, because remember, indirect cost is also known as overheads. These are examples: delivery cost, the depreciation of the delivery van. All right, package. Okay, here, there's one thing below here, which is part of production, but these are cheap packaging materials that are very, very small in value. Okay, less economic value. They are not production costs, direct costs, but they are indirect costs. Indirect costs. You got it, everybody? Let me give you another example. Do you have a question in your mind that you don't know where to classify, whether direct or indirect? No? Nothing comes to mind? Okay. All right. Let's see. Chair. Will it destroy the table? No, it will not destroy the table. Direct cost. Metal. Yes. Direct materials, correct? What else? The leather. Yeah. Okay. Good. And you have the labor costs making this chair, correct? Okay. And of course, but there is, if you look at the chair, there's the thread. Yes? What should I do with this thread? Should be direct costs. The problem is, I don't know how much meters of thread I use here. And the thread is very, very small in value, correct? Yes, very small in value. You know the thread, this one? No, okay. Very small in value. And it's very difficult to measure how many meters of the thread is used here, correct? Because of that small in value, I cannot put it as direct cost. You know where I'm going to put it? Indirect cost. This is what we're talking about. Anything that is very cheap. And if you're going to put it in the direct cost, you have to measure how many meters of, not economically viable. Yeah, not possible. You got it now? Yes. In here, there is a board. Yes. Okay. And there is a claw. And there is a cushion. And to be able to attach it, they put glue. Yes. They put glue and they put the cushion. Yes. The glue is material, correct? Everybody knows glue? Sticky one? The glue is material. Yes. But again, similar to thread, I cannot measure how much glue. They put the cushion. How much milliliter of glue was used there? How can we measure? Cannot measure. Glue, very cheap, right? So the cost of the glue goes into direct material or indirect material? Indirect material. You got it? Yes? Because when you put it in direct cost, it has to be precise calculation. All right? And if it's very small in value and cannot be traced exactly, all right, into how much it has come into the product, put it in indirect materials. Let's talk about the beer. Go back to the beer. I don't drink beer, but then water. Yes? Somebody said water. Yes? Water. So there are two types of water when making the beer. The water that is part of the beer itself. Correct? So it goes into direct materials. Correct? Raw materials. But there's water that actually has to be used in the machine, because when they do machining and they have to seal, right? It has to go to, for example, just imagine, it has to go into the machine, correct? For the machine to run, water has to be fed into the machine. Otherwise, the machine will, because it's too hot. Yeah. The material, the water that goes into the machine to get the machine, make sure that it's functioning. Where do I charge that water? Direct material or indirect material? No, you got it. It is indirect material. You understand? You know the difference now? Ah, very good. Now, because you know the difference, wait, before we get there, I have something here. You remember I told you production and non-production, okay? So in production, we call it production overhead, okay, which means production indirect costs. It says there, yes, to be able to make it clearer. It also, it is divided into the indirect materials, indirect wages, and indirect expenses. So indirect materials, those that we cannot charge to the product, just like the water that goes into the machine, that goes into indirect materials. Or the materials that are cheap or lesser economic value, the glue, the thread, goes into indirect materials. Got it? Indirect wages are those wages paid to those who do not directly make the product. The cleaners are working side by side the production, but they're cleaning the floor, not making the product, which means their salary goes into indirect wages. Again, supervisor. If the supervisor is one that overlooks all of the factory, here they make the beer, there they make the Coca-Cola, there on the other side they make the water, but he oversees everybody. His salary does not go to direct cost in any of them. Salary goes to indirect labor. Got it? Indirect expenses, which means they are neither labor nor materials, but it's important to pay for them. Rent of the factory, okay? Electricity of the factory, insurance of the factory, depreciation of the machine. Some machines are not powered by electricity, but by fuel. Yes? Maintenance of the plant, machinery and buildings. Okay? So maintenance, again, charged to indirect expenses. Last question. Well, last of many last questions. Administration, selling and distribution expenses are considered production cost or non-production cost? Okay, you got it? All right, good. Okay, yes, that's right. Okay, this one. I'm renting a warehouse, but the storage, I'm storing raw materials in that warehouse. As against, I'm renting a storage room or warehouse, but it's finished goods in there. Sorry, can you read my handwriting? Yeah, this is the midnight handwriting. I'm so sorry. Okay, finished goods. Two different goods. Yes? One is charged to production indirect expense. The other is non-production. Why? Because what is stored in here? Finished goods. It's about to be sold. Yes? You got it? Indirect expense, but non-production. Got it? All right. Clear. Question. Okay, no question? Okay. Can you find this? Activity number 1. Okay, is it there? Can you find it? Is it on page 67? All right, good. What I want you to do, for every single item, number 1, I need you to identify, is it a production cost or a non-production cost? 1. Number 2, after you know it's production or non-production, tell me, is it direct or indirect? You got it? You got the instruction? Yeah, so 2 things you have to do for each line. Identify if it's production or non-production. And in the second part, you need to say if it's direct or indirect. Instruction clear? Okay, how are you going to do it? You can discuss in groups of whatever you like. So 3, okay, 3, 3. Because 4, one of them becomes a passenger. Okay, so every 3 of you, okay, so Lini, you can join Vote and Sophie. Yeah, you can join Cyrilac, the 3 of you there. All right, so you have, guys, 10 minutes. After 10 minutes, I will open the Kahoot. So make sure you all discuss together. The Kahoot is not per group. The Kahoot is per person. Yes, we're going to go through and get the answers in here. All right, clear? Samnang okay? All right, Benjamin, okay? All right, so you can sit with them. Are you guys? You can share, discuss. All right. Okay, instruction is clear? Yes? If there is any question as to what I am talking about on the left, please ask me, okay? If you don't understand the term. Yes. Mhm. Yeah, the whole factory. Correct. Unless in an exam, unless they say that the factory supervisor is supervising that particular product, it doesn't say anything, which means general factory. The entire factory. They have to state if specifically he's in charge of only making one product. Okay. Do you need more time or you're done? Done? 30 seconds. Okay. So everybody seems to be okay. Where is my Kahoot? Okay, wait a minute. I am the one who's not ready, isn't it? Okay, everybody log into my Kahoot, please. Put your name and we are going to ask the questions. How to remove that sound? It's annoying. All right, we go, guys. Ready? Log in and let me know. Oh, no sound. Everybody has a Kahoot app? Who doesn't have? Oh, okay, okay. Hey, are we ready? How many is in here? We'll begin. All right, let's see. Okay, so remember, and earlier I was asking you, production and non-production, we said any costs associated with making the product will be production costs. And we said underproduction cost is indirect and direct cost, correct? Yes? Non-production cost, which will be any other costs outside production cost. Okay, so I gave you some of these costs and classified them accordingly. So question number 1. So 2 answers. You need to tell me, is it production or non-production? And is it direct or indirect? The overalls are these clothes that these workers work in the factory. That is what overalls for the machine workers, the clothes that they wear. Yes? What happened? The clothes are indirect costs. It is production. They are working in the factory. The one that they're wearing, does it become part of the product? Ask me, answer me. Does the clothes that they wear become part of the product? Yes or no? No. Which means it's not a direct cost. It's an indirect cost. You understand, everybody? So it is a production cost, yes, because they're working in the factory. And these are indirect costs, not direct costs. Okay, not direct costs. Okay, so remember again, I will repeat. Direct costs are costs that can be fully traced to the product. Yes? Right. So let's see. Next question. Okay, 2 things again. Okay, cost of the printer ink used in the office, in the general office. Okay, so again, it's a non-production cost and it's an indirect cost. Yeah. Non-production, indirect. All right, next question. What about the salary of the factory supervisor? Correct. It's a production cost because he's working in the factory. And it's an indirect cost because it doesn't say specifically he is in charge of a particular product. It's the entire factory that he's looking at. All right. Next question. Payroll supervisor. Hey, that's right. Non-production is in the administration or is in the accounting. Indirect costs. Okay. And there is a pattern that's coming up. All right. Next question. The rent where they store the finished goods ready for sale. We talked about that earlier. It's the factory rent or the warehouse rent, warehouse rent, storing the finished goods. Correct. It's non-production and it's indirect. Why indirect? Because why non-production? It's part of selling and distribution expense. You remember? Yes. All right. And it's rent. It's an indirect cost. All right. Here we go. One more. Interest on loan. Pay interest on the loan that has been made. Okay, it's in financial accounting, interest on loan is actually a finance cost, correct? Yeah, so it's non-production, nothing to do with production, right? And it's an indirect cost. All right. Okay, where's Shriliak? Very good, Shriliak. Oh. Okay. Number 10. The security guard of the factory. Mm. You're not sure. Factory security guard is part of the production. If I had the security guard for the main office where you have the accounting department, you have the CEO office, his salary would be what? Non-production. You got it? Two different things. All right, next one. You pay customers to settle their receivables. This is what it is, yes? Early settlement discount is to settle the receivables from customers. You're asking customers, pay early, I give you discount. Yes, that is correct. It's a non-product. You know what it is? If you ask them, in reality, if you ask customers to pay back their receivables earlier, you give them a discount. In financial accounting, where do we put it? What is that expense? No, it's not a trade discount. It's a settlement discount. Trade discount is different. Trade discount is when you sell, you actually discounted it from the selling price, correct? This one you already sold, okay, on credit, and then when you ask them to pay early, you give them a discount for paying early. What's that? Yeah, it's a sale discount. But in reality, it's a what? It's a finance cost. Yes? Why finance cost? You needed the cash. Instead of going to the bank and getting an overdraft or a loan, you ask your customers to give you the cash. And instead of paying the interest on a loan, you actually gave them a discount, which means it's the company's finance cost. Correct? Got it? Oh. All right. So, yes, non-production, similar to the interest on a loan. Non-production, indirect cost. All right. Okay. The chairman's personal assistant, the salary, where does that go? Correct. Non-production, indirect cost. Think you get the idea? Okay. Road tax license for delivery vehicles. They need to pay. These vehicles deliver goods to the customer. Remember? Where do you charge this? Give me the journal entry. Debit what? Road tax license. I will debit it to sales and distribution expense. Yeah? Distribution. Because that's part of, yes. It's not even debit asset because it's not part of the asset. Every year, you pay the road tax. Okay? All right. So indirect costs, non-production. All right. Okay. Bank overdraft. Everybody knows what the bank overdraft is? Yes. All right. So when the bank pays your suppliers, even if you don't have money in your account. So what is it? Indirect cost, non-production. Similar to the finance cost. Yes, it's very much a finance cost. Similar to interest on loan. Because basically an overdraft is a bank giving you loan. Yes, by paying your suppliers, your who are coming with the checks to the bank, by paying, clearing the checks, even if you don't have money in your account, it's like the bank taking from their own pocket and paying these people first because you don't have money in your bank account. So you're actually getting a loan. Okay. All right, one more. Salesmen's commissions. Okay, you know what is a commission? They are paid based on what they sell. Right? That is correct. Okay, that is correct. Sales expenses. Very good. So you probably now see a pattern that all of the non-production costs are indirect costs. You can see that? Yes? All right. All non-production costs are indirect costs. Right. So they were making a chair and table. Okay. Which two would be considered as indirect costs? I know it's not in your question, but answer. A company makes wooden chairs and tables. What would be considered as indirect costs? Staple wire is to attach a label. You know, like, I don't know if you understand what is a staple. Very good. Very, 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 very good. Yes. The staple is the another example, like the thread and the glue. Yes. Yeah. So instead of you know, when they put a staple, it's very cheap, right? In one of the staple wire is very small value, and the salary of the sales director is a non-production cost. It's an indirect cost. Okay. All right. Good. Very good. Long. Well done. Everybody at the back, huh? Kim, good. All right. Congratulations. Oh, Hack and Lini. Where's Lini? Oh, Lini. Where's Hack? Okay. Let's see one more time. Okay. Very good. Very, very good. Now. Okay. So, as you can see, all non-production costs are all indirect costs, as I see the pattern. Okay, you can see the pattern. Okay, administration costs also are all having indirect expenses. Okay, depreciation of the office building, equipment used in the office depreciation is an indirect administration costs. Salaries of directors, secretaries, accountants are all indirect wages. Rent, rates, insurance, lighting costs or electricity costs, cleaning costs, telephone charges are all indirect expenses, and cartridges for the printer is indirect materials. All of them are non-production costs. Yes? You've seen that pattern earlier. Yes. Yes, sure. Sorry. Mm. Mm.
Based on my understanding, it should be separate production and cost. So it should be two components.
So where will we put him? Where will we put him, Salim?
Cost for the factory supervisor, actually, he monitor not only the packaging or moving or warehouse, and actually he monitor all. So the cost will be there, not only the production but also other.
Yeah, what does he monitor in the factory aside from the people doing the work? Yes, that's right. He's going, if he's going to be a factory supervisor, yes, he will supervise the people making the product, the cleaning department. Yes, all right. The ones who are cleaning the department, the one who is in maybe the maintenance department. Okay, let's say. Okay, in your example, yes. All right. So, which means he's looking everything, right? So still, all of those are production costs.
So if you look for outside, let's say, office office building or other building, you know.
So he's the supervisor of the factory and then also, okay, no problem. No, only the factory department. Only the factory. Now, if in the same building, okay, I understand what you mean. In the same building, this is the factory, same building, same roof, huh? Factory and portion. I work in the same factory like that. And then part administration, part sales, part marketing. Yes, but this factory is only in the factory area. You understand? Then only production, my friend. Yes. It doesn't matter if it's in the same building. But you mean the factory supervisor will also supervise accounting? No. There is another supervisor in accounting. The salary of the supervisor accounting goes to indirect administration expense. Got this now? Yeah, because there are instances when this is the factory building, this is office, separate. Yeah. But even if they're in the same roof, yeah, in the same structure, you have a separation. You got it? Now, the next question there is the rent of the entire thing. Correct? That's another story. We'll talk about that in overheads. Yeah. When you have the rent of the entire thing, will we separate the rent for the factory and the, yes or no? What do you think? The rent. We have to rent the entire building, correct? And you said inside the building, factory, office of the manager, sales, yes? Now, what about the rent? You pay for the entire building. So, go ahead. What do we do? Where? Correct. Very good. Which means you have to divide it, right? How many floor area, we'll talk about construction. How many floor area is factory? That goes to production, correct? How many floor area belong to the other non-production? Go to non-production. Got it? But both rent is still indirect cost, correct? Whether it's in the factory or production or non-production, rent is indirect cost, right? Got it now? Yes. All right. Now, very good. What happened? Okay, no. It's over here. Okay. Selling overheads, all right, are still indirect cost. Yeah, you say selling and distribution. Let's say they had stationery and printing because they will prepare a package, what do you call this? Brochure. You know what brochure is? You know, when they sell something, they show you a brochure, advertisement of the product that says the product specification, indirect material. Yeah. Commission, we asked earlier, commission paid to the salesman is indirect salaries. Yes. Advertising, okay, sales promotion, market research, indirect expenses. Make sense now? Yes. If they rent a showroom, for example, yeah, they rent a small store to show the product. The rent of that is selling expense because they use it to display the product to sell. You got it? Okay. Okay. Indirect expenses. Distribution. You remember the truck we paid for road tax? Distribution. Indirect expense. Okay. Non-production expense. Yes. Packaging. Don't be confused here. You remember I talked to you about the beer? I started with the beer, I end with the beer. The beer comes in cases like this, correct? That's part of the cost of the product. But what is this? When you ship goods in pallets. You know what's pallet? Yeah. Where is the magic pen? You know, everybody knows what the pallet is? Yeah? Yeah. So when I'm going to ship it, I'm not going to ship by case. Because I need to go to send the beer to a distributor, correct? They buy it from a distributor and they sell it, correct? You know, Salim, huh? You know very much about this beer business. Okay, so this is a pallet. It's made of wood or sometimes made of plastic. It's about 5 inches or 10 inches in height, correct? What do? They actually put the packages up here, correct? Until a certain height, whichever fits the van, correct? It has to go into a van, a truck. So they make sure that when they put it together, it's just enough height to fit into the van. A forklift, you know what is a forklift? Yes or no? Anybody knows a forklift? What does a forklift do? Okay, they actually take the pallets, correct? And they will load it into the van. Yes? All right. But this pallet, you know, it will not stay there until you wrap it with plastic. Yeah, it's called, and it all disappeared. It's called, oh my, it disappeared everything. Okay, I start again. All right, we have all night, isn't it, together today? All right, so basically, it's somebody is trying to mess with my drawing. Whoever you are, get out. I am in charge until 8 o'clock. Okay, don't disappear. Okay, sir, sorry. So they will package it, correct? Okay. Then of course you will have, as I said, the forklift that will lift this pallet. Sometimes they lift it and put on the storage or lift it and put it in the truck. Yes? Now, is there a cost to the plastic that you wrap around the pallet, the product? Yeah, that costs money, correct? Okay, do you buy these pallets, the plastic ones and the wooden ones? Sometimes the wooden ones are disposable. The plastic ones are reusable. But sometimes, most of the time, it's made of cheap wood. Okay? It's called, sorry, but it's called the China wood. But all right. Question, sorry, where is it? Here. So cost of packaging, this is the packaging I'm talking about. The packaging required for shipping. Yes. If it has to go into an airplane or a boat, it's secured with a box. A big box to cover even the pallet. Yul? It's big box and then the pallet is just outside because in the shipping yard, they put the forklift to put it in the boat or in the truck to go into the boat or go into a container. You know what a container is, right? A big box that you put things to ship. All right. Wages of packers, drivers, dispatch clerks, salary to selling and distribution. Okay. Insurance, of course, insurance of the cars, insurance of the truck, insurance of those the forklift vehicles that they need for shipping, all that, depreciation, etc., are indirect expenses. Okay? You got it, everybody? Make sense now? Good. I have another activity, but not enough time for today, unfortunately. Okay? I have prepared one more. Maybe I should give it to you as a homework. Is it okay? Yeah, yes, better. Okay? What I want you to do here, ladies and gentlemen, on your own now, let's take it one step further. You have examples on the left and 2 things you need to tell me. Well, you can discuss it with your friend during the week until Wednesday. You have to say, is it a direct or indirect cost? And on the right side, you have to tell me, is that direct or indirect cost? Is that a material cost, a labor cost, or other expenses? You got it, the instruction? And then we will use a Kahoot on Wednesday to, not now, of course. Yeah, on Wednesday. I think I don't have enough time. Do we have enough time? It's, I have 15 minutes. Would you like to do it now? Oh, please do it now. Okay, 5 minutes, and then we go to, it's very short. Okay, I'll give you 5 minutes. Finish it, direct, indirect, and then, yeah, Benjamin does not like homework. He's allergic to homework. Okay, correct, Benjamin? I know Benjamin doesn't like homework. There is a, I think there's an activity. There's also a 2-set question below. If you can look at those 2 questions also, please do. Okay. To hire means to rent. Huh? Okay, 1 minute. Are you done? Okay, I'm going to start opening the Kahoot so you can start logging in. Okay. This will be very, very short and sweet, I hope. All right. Let's take a look. So let's take a look. The first one. Okay, you're going to tell me, okay, you have only to choose one because I will already say direct material or indirect labor like this. It's not two choices, one choice only per question. All right, so first one. Hiring of a specialized tool for production, specialized for that product. Oh, what happened? Yeah, it's other direct. It's not a material cost. It's not, okay? So it's not a labor cost. It's other direct expenses. To hire means to rent. Yeah. All right. Okay, very good, Kim Long. All right. Rent of a factory, building. Hey, not direct expense. It's rent, my friends. Oh my God, not direct, indirect. Okay. Okay. Next one. These are not expensive packaging materials. Not expensive. Where will you put them? All right. Yes, indirect materials. Indirect. I said already. Cheap, not expensive. Ooh. All right. Next one. Factory supervisor salary. indirect labor cost. Very good. Okay. Next one. Oil. Oil is material. Yes? It's materials. You buy the oil. It's materials. Yes? What do you mean why? Why not? Huh? Yes. Oh. It says indirect material. There are materials that are not part of production. I told you earlier, let's say I'm cleaning the factory floor. I need soap. Ah, isn't that material? Yes. The thread. It's not, we said, it cannot be measured. It's small in value. Yes, it's part of the product, but I cannot put it as direct material cost. I put it as indirect material cost. Yes? So it's still used in production, correct? But does it become part of the product, the oil that you put into the machine? It's just oil to make sure the machine works so that they can make the product, correct? So direct or indirect? You get it now? Yes? Other indirect expense, rent. Let's say you have a machine that you have to put fuel. Let's say the forklift, for example. Where did I put under expense?
Fuel or power.
Okay. There's difference between fuel and electricity. There are machines that are powered by electricity, correct? Electricity is other expenses. It's not material, it's not labor. Do you understand? Because I pay electricity de Cambodge. I don't take power and make it in the machine, correct? I pay a supplier of the electricity that goes into the factory to power the electricity, correct? But there are machines that doesn't run on electricity. Electricity cost is other expenses. It's not labor, it's not material. You don't buy it. You don't hold it and you don't put it in the machine, correct? But fuel, I go to the Caltex, I buy the fuel, gasoline, and put it inside the machine. Materials? Yes. I buy the supply from a supplier and I put it in gallons and I put it onto the machine. That is a material. You got it? Different things? Yeah. Electricity, water through the utilities I pay to the public water system of Phnom Penh. Other expenses. Okay? But if I buy bottled water, yes, because I need to make sure I use bottled water to make my product, and I buy this in boxes and I put it in the warehouse, in the storage. When I need it, I ask from the storage some materials to make my product. So this is material. You get it? Ah. Clear. Oh, I knew. That's why we do the exercise. Huh? Don't be too hard on yourself. You have to be perfect, no? Okay. All right. It's okay. That's good. That's good. Wages of factory involved in production. This one is easy. I must get perfect here. Otherwise, whoever doesn't get it correct will pay dinner for all of us, huh? Buy nompang patay downstairs, huh? There are 4 of you who's not going to pay for dinner tonight. Hello, it's you, huh? Okay, thank you very much, Benjamin. You're gonna pay for dinner. Okay, direct labor cost, my friends. Okay, all right. The factory workers involved in production. Okay. Benjamin made it purposely, so that he will give us some nompang patay. All right. Now, this one, the equipment is used in factory, but it's the depreciation. You must get it. Yes, other indirect expenses, depreciation. Okay, hold on, almost there. I know the boat is leaving. Hold on. Okay, I know. All right. This one. Did you see this or no? Which of these following is to be classed as indirect labor? Sorry, I didn't remember to ask you. Indirect labor. Let's give a guess. One of you didn't answer. Okay. Let me explain to you. Okay. Assembly workers normally are direct laborers because they put things together. Let's say they make television set and they assemble things to make the product. Yep. Plasterer in a building. You know what is a plasterer? When they make a building, they try to, not this one, the cement, and they make it smooth. Yeah, you saw my drawing. They try to smoothen the cement. It's called a plasterer. So that is also a direct worker in a construction company. Yes, she's working in a construction. So the plasterer makes the wall smooth. So that is your direct worker because they're building the audit clerk in an audit firm, yeah, in an accounting firm, is a direct worker. They are the ones doing the audit. But a storeroom assistant in a factory is an indirect worker. You know, this job of this person is to manage the storeroom where they keep the materials. When the production needs material, they come to this room and say, can I have some of these materials I need for production? That assistant working in this factory is an indirect worker. He's in the production, he's in the factory, but he's not involved in production. His job is to keep all the raw materials that you buy from suppliers. So indirect worker. You got it now? We will have more of that example in the next week. All right. Sorry, I'm gonna skip this. Okay. What are direct costs? What therefore is the correct definition of a direct cost? Yes, costs that will be identified to one cost unit. That's correct. Anyway, all right, I think this one we already spoke about it earlier. So I'm going to skip it. I hope I can skip it still. All right. So, very good. Who is in the very good section? Vanit, where are you, Vanit? Ah, Vanit. Okay, Lini. Very good, Lini. All right. Pete. Ah, very good, Panyapit. Okay, Hack and Kim Long. Very good. Okay, that is it for today. I will see you all on Wednesday, but unfortunately that Wednesday will be online. Yes. So start to read chapter 3B and chapter 4. I will post those self-study on 2A and 2B on the Google Classroom. Okay. So thank you for coming today. Oh, sorry. On Wednesday, no class on Wednesday. Sorry. I'm going to attend a meeting, which means I will see you Saturday next. Okay? All right. So no class on Wednesday, Saturday next. Online. Saturday online. Yes. Correct. Okay, guys. Good night, everybody. And the dinner is on Binyamin. No, just kidding. It's okay. Benjamin is so serious, ah. He will take it seriously, ah. Thank you, everybody. Thank you, Pang Pang. Thank you, guys. Good night, everybody. Drive carefully. Yes, see you soon. Thank you, Samnang. Okay? All right, good. Very good, Kim Long. Thank you. See you soon.